Hi, I'm Peter Alchin, CEO of Seabury. I want to talk to you about something that just might be a life changer for you, as it has been for me. I've been a senior financial advisor for over 30 years, working with countless private investors, corporations, superannuants, self-managed super funds and retirees, creating new and progressive financial strategies to suit their own personal lifestyle needs. In recent years, a number of changes have really altered much of our financial landscape, especially for retirees, those saving for retirement and those who have self-managed super funds. I'm sure that many of you in that space are well aware of those changes and the impact they will have on your end retirement benefit. What I'm going to do now is share something with you that I discovered by Pure Charts, which changed my perspective on how to value add to my own personal investment portfolio. It may well have the same impact on you. Now, I'm sure you've not heard of me, but I'd be surprised if you haven't heard of this guy here, Warren Buffett, arguably one of the most influential and respected financial minds of the 21st century. He made many a profound comment over his lifetime, and they are principles by which he himself and I invest by. Here's just a couple of his pearls of wisdom that he's offered over the years. And I would like for you to keep these in the back of your mind as I share with you my own financial discovery. Okay, to make money, one needs to move before the mass. What I'm about to share with you is a whole new way to think outside the square. But it won't be new for long. Another favourite pearl of wisdom from Warren is that the investor today does not profit from yesterday's growth. Let's face it, the question on everyone's lips is, where will added growth come from in today's low-yield, unstable global economic environment? The difficulty for many is trying to find alternative, innovative ways to achieve growth with less risk, while safeguarding our hard-earned cash and increasing our portfolio's value. Isn't it the main aim of all who invest? But how do we do that when they, the government, just keep moving the goalposts? There's been noise around changing negative gearing rules or abolishing it altogether. What about superannuation, self-managed super fund owners and retirees? For many years, educated, savvy investors have accumulated fabulous collectibles and wealth, from coins, stamps, jewellery, wine, vintage cars, and paintings. Well, those with them in their own super funds can take down your paintings, hide your coins and your wine collection, or pay out your super fund and drink it. There are new storage and insurance regulations for self-managed super funds, and they're already in play. Those who don't comply will be shown little leniency from the ATO. And how are they, the tax office, monitoring it? By increasing your burden of trustee compliance and collectible insurance responsibilities. For those who are subject to the new rules, I'll be outlining them at our next seminar, so don't miss it. I'll tell you more about that a little later. But what I want to do now is show you there is an untapped, vibrant collectible asset that's been proven to grow steadily while weathering the likes of the 2008 financial crisis we all unfortunately faced. And the kicker? It's been a proven winner for collectors and investors for thousands of years. That's right, I did say thousands of years. And the best yet, it's been flying under the investment radar of most investors, only really known about by the savviest, educated ones. Well, not anymore. I'm going to open your mind to a strategy that could be a real game changer for you and your investment portfolio, as it has been for mine. Gemstones. That's right, gemstones. They're a fixed, tangible asset, just like property, except far more liquid. Can you sell a piece of your house like a wall? No, not really. But gems, on the other hand, now, they can be sold as parcels or individually. And unlike property, paintings, wine collections, or vintage cars, they take up a whole lot less space to store. Let me ask you, what other asset worth thousands of dollars can you physically hold in the palm of one hand? Gemstones, I hear you say. Really? Is there a growing market? Well, let's have a look. For centuries, precious gemstones have been prized for their allure, their beauty, and primarily for their ever-increasing value. As the demand for beautiful stones has been historically consistent, the supply is finite. Therefore, the value can only really go one way. That's right, up. Okay, so you're still not sure. All right, let's compare. How have precious stones performed over the years against the S&P 500 and the All Ords Index? Remember how I mentioned their rugged resilience to dramatic market downtrends during the global financial crisis? Let's look at this graph, which spans over almost a decade. The Coloured Stone Index is at the top and clearly shows consistent upward growth with little downward movement. Compare that to both the indices. I think that speaks for itself, with both the ASX and the S&P clearly showing unstable growth due to fickle global economies and destabilised markets. And what about how well precious gemstones have done compared to other commodities such as gold? See how much more stable the returns on coloured stones have been against this universal currency? Coloured precious gems perform with more stability, weathering the tough times and with less downward risk. Why? Because they're less affected by global economic turmoil and driven by an ever-increasing demand. So what about other precious stones like the girl's best friend, diamonds? The diamond market line on this graph can be seen in orange. You can see for yourself. The green trend line of coloured gems is upward in value with less volatility and associated risk. Why? Well, unlike diamonds, gemstones such as sapphires aren't strictly controlled through stockpiling and drip feeding back into the market in an effort to regulate prices to keep them artificially overinflated. So who would do this? Well, the diamond houses such as De Beers and the like. That's who. Precious coloured stones like sapphires are far less affected by market fluctuations than commodities, property, or even cash for that matter. This can be seen on this graph, which was put together by the world's most industry-recognised valuation organisation, GemVal. So let's look at a news article written by news.com. What have they got to say about precious gemstones? The heading is Handy Assets. Precious stones have been first choice investments since man first dug them out of the ground, rivaling gold as an international currency. And there is a new hungry market out there, the Chinese. So what does the article recommend? Well, don't just buy classic investments such as diamonds, emeralds, rubies, etc., but gems that have growth potential like tourmaline, garnet, and even tanzanite. The demand for precious coloured gemstones is on the rise, and you need to move before the mass to take advantage of this phenomenon. Okay, so you're probably thinking, well, yeah, I can do this myself. I can go online, buy a bunch of precious rocks direct. Well, that's where the point of difference is. Get it right and it can make all the difference. Get it wrong and you can really get it wrong. Ask those who unknowingly bought glass believing they were diamonds. I really feel for you. So, how do you get it wrong? Simply by not knowing what you're doing or by not having the right support behind you. When I do this, I work closely with an entire team of local overseas specialists and experts who assist in selecting the very best stones from their place of origin. Would you like to see a real example of what happens when we get it right? I would love to show you, so please do come to our next seminar and I'll present you with a live example then. So if you'd like to learn more about this incredibly exciting rock hard asset and how it might be a beautiful fit in your portfolio, as well as the many member benefits associated with being a Seabury investor, simply click the link below. There's no obligation, just register your interest and we'll notify you of when the next live seminar will be in your neck of the woods. Thanks for listening, and I really do hope to see you there. Oh, I almost forgot. Something extra special you really need to be aware of. Every attendee at our exclusive seminars will receive an amazing Seabury gift to take home. It's our way to say thank you just for turning up. Believe me, the exclusive seminar will prove to be priceless in itself. The gift will simply blow you away. What do I mean by exclusive? Well, we don't run large crowd sessions. All attendees are personally hand-selected for an upcoming seminar that suits them. After all, not every individual has a self-managed super fund. Some are simply educated individual investors looking to build their personal portfolio or their future retirement position. So don't wait. Apply now and don't miss this eye-opening opportunity. Remember, it won't be a new strategy for long, so let me leave you with a reminder from Mr. Buffett. Think about it.